Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the session. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, thanks. I've got enough responses. Looks like we're up and running fine. If anyone needs any help as we go along, if you're having any issues, just let me know. Lot going on fundamentally out of the US because of the presidential debates, or debate, I should say, that will be happening this evening, US time. And so the markets are kind of anticipating that. And some other things that happen fundamentally we'll take a look at as well that is relevant today. And then we'll jump on the charts. We'll take a look at how maybe you can try to take advantage of the situation with the debate this evening and the setup on some assets. Keep in mind as we move forward that all investments have risk. That includes Forex trading, spread betting, options trading, trading on CFDs, etc. Obviously, no one trade is guaranteed to profit. We all understand that, I think. But certainly each and every trade has a good potential for profit. And so the idea here is to manage your risk in a way that makes sense for you, whether that's with stop loss marks or using our AvaTrade Go mobile app, which has some unique risk management features to it. One being AvaProtect, which allows you to cover risk during defined time periods for a small premium cost. If you don't know how that works, talk to your account manager. I'll try and show you real quick at the start of our session here as well. But there are different ways to manage risk, and you can go about that in a way that makes sense for you. Keep in mind that what we cover in the sessions is coming from an educational perspective and not to be taken as financial advisement. But certainly the information can be helpful in hopefully improving upon existing trading strategies, and or if you're brand new to things, to begin building a trading strategy with a nice foundation. So keep in mind there are a couple types of fundamental analysis that we do, types of fundamental news. One would be regular economic events, things such as retail sales, unemployment figures, PPI numbers, factory production numbers, all of these types of economic announcement material that is scheduled. You know what it will be, you know when it will be, it's listed on the economic calendar, and you know exactly what asset or assets those announcements are expected to affect. And so, planning for those types of events or announcements are pretty easy in terms of timing. In terms of scope of the movement, how far will the movement go? Well, that's part of strategy. You work into where you want your take profits, your stop losses, etc. Now, the other type of fundamental news would be extraordinary economic events, like breaking news about vaccines or breaking news about new testing equipment that was announced out of the US yesterday, that they're distributing 1.5 million rapid response tests to schools and lots of high need areas to get the economy going even more. And so, and obviously when it comes to schools being able to reopen and do proper testing, that allows parents to go to work. So all of that's connected with the economic surge that we've been seeing across the globe, and specifically in the US on the NASDAQ, S&P 500, Dow Jones. Why have they been doing so well? A lot of it has to do with anticipation of a vaccine coming, anticipation of announcements about better testing, etc. And these are all types of extraordinary fundamental news that you don't know when the headlines will hit, but then when they do, they affect the market. And you can anticipate with pending orders and different types of strategies, news that you expect will break eventually, but you don't know exactly what it will be or when it will be. And it's nice to prepare for that kind of news. Part of the extraordinary news now is what's going to happen tonight in the presidential debate. It's kind of a mix of the two types of news, really. The regular economic events, we know what they'll be and when they'll be. Well, we know it's a presidential debate, and we know it'll be this evening. We know the time. So it's kind of like a regular economic event, but it's also kind of like an extraordinary event because it doesn't happen but once every 4 years in the U.S. And so, and the stakes are extraordinarily high for some of these candidates because, or some that are backing these candidates because, you know, the economic outlook couldn't be more different between the two candidates. And so, you know, one wants to raise taxes back up on corporations. The other wants to cut regulations even more and keep the taxes low. And the markets are really watching this debate performance tonight. They're watching for any inkling of whether they think it's more likely that Trump will win or more likely that Biden would win. And so, the markets are tending to view if they think Biden does well in the debate and he's more likely to win the election, the markets could really have a pullback. They could really react in a negative fashion because of the likelihood of increased taxes and non-pro-growth business ideologies that Biden himself has been pushing. So let's go ahead and get into some of the fundamentals. Now, I mentioned the AvaTrade Go mobile app and the fact that it has a special feature called AvaProtect. So if you haven't checked it out, you can find our different platform options here and go to AvaTrade Go and download it onto your mobile device. You also can just keyword search in your app store. Georgios, I'm sorry that you didn't follow the strategy on gold. It's nice if you would have. It would have paid well. We're talking about breakthrough strategies and bounce strategies with pending orders would have worked very well. We'll take a look at what gold has done. And oil too. Boy, oil was a big one today. But don't worry, if you didn't catch the opportunities, there will be a lot more, I promise. So trading made simple. The AvaTrade Go app is nice because in the order window, if you put a take profit or a stop loss, it'll tell you how much you're risking in your account currency. It's like a trade calculator before you ever buy or sell. So it's very nice for managing risk. You also have AvaProtect. You can cover various assets, gold, silver, FX pairings for different time periods, 1 hour, 2 days, 3 days, whatever you choose, for a premium cost. Now this example is a huge trade, 100 lots on what is this, GBP USD, 100 lot position, and the coverage for 3 days is less than $1,000. You know, for someone trading 100 lots, the profit potential on that is huge. Okay, for not much risk for 3 days coverage, right? So if you expected volatility in an asset and you could divide the trade size, you know, if you want to do 1 lot or 1/10 of a lot or whatever, obviously the premium cost is a lot less as well, and you still have nice profit potential. But obviously you can work this to your strategy on the asset you want to trade and the length of the coverage that you want as well. Any loss during that covered time period is completely added back, minus the premium cost that you pay up front. So I've seen this coverage pay thousands for people. And so if you expect high volatility like tonight, you could have huge movements one way or the other, depending on how the debate performance goes for these guys. Listen, you could take your shot in one direction at a huge profit. If it goes flying the wrong direction, if you're covered for the day, hey, any losses are covered during that time period. So it's something that you could use during a time like now, where there's expected maybe huge movements with the debate being tonight. We can see in the headlines, you know, Wall Street edges lower ahead of first presidential debate. The market's been wiggling kind of sideways all day. Okay, it's down a bit. I'll give it that. It's down, but it's also been kind of wiggling on its way down. Not huge movements all at once, kind of waiting for something to happen. And that something I think is going to happen through the evening tonight, US time, and through the night, you know, European time and others. So, you know, pending orders set up to anticipate huge volatility, huge swings on especially US assets, really have the potential to pay huge. You just want to manage your risk. The volatility's been up all day. It makes sense why the volatility would be up all day, but not up huge, not up like 10%, 15% on the volatility index. This is the VIX 500 measures the volatility of the 500 companies in the S&P 500. I've seen days where the volatility is up 15%, okay, on the VIX. That's a sign that the markets could really crash or already did. Usually when the VIX is green, the markets are red, and that's no exception today. But up only 3%, it's waiting. It's waiting. That volatility could go down if it looks like, I think if Trump looks like he's blowing away Biden in the debate, you may see the markets react positively. And the opposite, if Biden is doing good and Trump slips up, you could see this volatility go up 10%, 15%, and this red get deeper red. Okay, so that's something that everyone's watching. It's been in the headlines all day. Okay, that Wall Street and really globally, it's not just U.S. markets that are affected by this. Everything's global. You can be watching the DAX, the CAC, the Nikkei, etc. Okay, and gold and platinum and oil for that matter. All of these major assets are going to have some big reactions to what happens through the night tonight. Okay, and we look crude oil slumping on economic fears. Okay, why are there economic fears? Because of the pandemic. I mean, it's still there. So that could be an opportunistic entry point if in the bigger picture you're bullish on oil. Type okay if you're still hearing me. I have someone saying there's no audio. Okay, great. I have enough responses. It's just Abigail. Okay. So I think we're getting the picture here. We've got economic announcements were mixed today. Nothing major. Some red, some green out of the European Union, some red and green out of Great Britain. Some good news, some bad news on the scheduled economic announcements. Nothing enough to throw the market in only one direction. This was a pretty bad slew of announcements here out of the European Union, but none of them were high-level announcements, but certainly lending to it more negativity for the euro today, fundamentally speaking, and some negative numbers for the Canadian as well. But then you see later some positive numbers came in for the U.S. Okay, consumer confidence is a big one. So the U.S. markets could be poised for a big jump with that type of consumer confidence. If Donald Trump does well in the debate tonight, you really could see some market movement combined with positive momentum with consumer confidence. Okay, so we're looking here at potential, and that's what trading is all about. Potential, and I think there's a big potential for movement on U.S. markets, and we've got some positive numbers here on consumer confidence. Okay, and we've got some FOMC members speaking right now out of the U.S., so that'll get the markets bouncing a little bit as well. So what else? Pelosi maybe finally agreeing that the Democrats will agree to another stimulus package that the Republicans have been trying to pass. The Democrats have a lot of add-ons that they like to add on to stimulus packages, and it looks like maybe there'll be some compromise between the left and the right in the U.S., and they may get another stimulus package passed. Again, that's leaning towards a reason for positivity on the markets. Positive consumer sentiment out of the U.S. Potential deal here for more stimulus in the U.S. The Philadelphia Fed in the U.S. saying they think the recovery should continue as long as the virus is contained, doesn't get extremely worse, with more rapid point tests coming out, with potentially a vaccine coming out here in a few weeks that the U.S. says is close to being ready. You really could see this momentum pick up hopes of a recovery. So we're seeing a lot of positive sentiment headlines that could really reverse the negativity we've seen today. There's some caution about keeping zero interest rates zero so long in the US and other places around the world, but no talk about eliminating the low interest rates as of yet. So nothing to spook the market in terms of interest rates with what has been said so far. So That's an overview of this of the fundamentals in general. Some fear on the market, some anxiety leading into the debates. I think the big movements are yet to come. Okay. Now we look at oil, and what do we see? I've got 4-hour candles, and I've got a great support level here. Look at this old resistance here. Resistance, breakthrough, becomes support with a nice bounce right here. So if I'm looking for a move on oil, okay, limited risk move, I could say, okay, let me buy on oil. Fundamentally speaking, we just looked at some positive headlines. Okay, there's some fear about the economic situation, and oil pulled down. Okay, we understand why it pulled down over the last 12 hours or so. Now the question is, what about those positive headlines, the positive sentiments? What about the potential for good news out of the debate as the markets see it tonight? Nobody knows for sure who's going to win the debate tonight, and whether there will either be a decisive winner. But if Trump does well in the debate and Biden does bad, you could see oil bounce, because markets are going to say, oh, taxes are going to stay low in the US, pro-growth policies, and you could see oil bounce back up. So if you take a market move here, where would be a spot that might make sense to maybe put a stop loss? Someone else complaining they can't hear. Just typing a note. Okay. Any suggestions? Where might you put a stop loss here? 36. Okay. Why 36? That's below how many support levels? Below how many support levels? If we put our stop loss at 36, we're being patient, right? Because yeah, it's below 2, maybe 3 support levels. Let's draw the lines. Here's the first support level here where it already bounced. Okay. So it'd have to break this support level. Some would say, I'll put my stop loss here. Very small risk, quick in and out. That's just fine. Good. I'm glad some of you are getting your audio straightened out. Okay, so the scalper would say put your stop loss here. Very small risk. If it goes up, maybe your take profit is at the first resistance level. You got about 3 to 4 times potential profit to what you're risking to a stop loss below the first support level. But, I can't see you, but I can say, hey, raise your hand if you ever got your stop loss hit, then it went the right way. And you say, man, why didn't I put my stop loss a little further away? Why was I so impatient? So the scalper says, I don't care. If it breaks the first support, I'm out, small risk. My ratio is great. If I win 1 out of 3, I profit with that setup, with my stop loss below 1 support level. But if you say, yeah, but there could be volatility leading into the debate tonight. Maybe I want my stop loss below 2 support levels. So then you say, okay, let me stretch my stop loss down. If I can activate this line. Here we go. If I put my stop loss here, now I'm below 2 support levels, right? Because here's 1 support level, and here's my second support level right here. Okay? Support, support, bounce. So now to lose, I would have to break through 1, 2 support levels if I put my stop loss down here at like 36.3. And look, I'm only risking the same amount as my potential profit. My risk is from here to here. My potential profit is from here to here, almost the same. Okay, so now I can be more patient. Now I don't hit my stop loss on a false breakthrough. If it just tests this 1 support level and then goes back up, I didn't get out of the move early. But now I have to risk more, right? To get my stop loss below 2 support levels. So let's say I didn't take 0.2. If I take a trade size of 0.05, now I can have the same level of risk to have my stop loss below 2 support levels, but now my potential profit's less because I took a smaller trade. Okay, so it's all about your style of trading. You can risk the same amount with a stop loss being further away. You just take a smaller trade, right? Now, some of you are saying, well, what about a sell stop? So let's set it up like this. Let's say, okay, I'm going to scalp. I'm going to say my my stop loss will be here. So let's say, and by the way, if you put it at 36, you're below this little support level here too. And that's why our participant who said 36 gets you below 3 support levels, it would have to break this support level, it would have to break this support level, and it would have to break below these low points here, which is a 3rd support level, before it would hit 36. So you'd have to be really wrong. And that's being very patient for it to go up. And you'd increase the likelihood of winning by doing that, because it's less likely to drop below 36 and break all 3 of those support levels than it is to break just 1 support level. Okay, so different styles of trading, and you can do both as well. You can have one move that has a stop loss here, and you can have another move that has a stop loss below 3 support levels or 2 support levels to diversify a bit. Now, someone said, what about a sell stop? Okay, let me finish the stop loss then here. Let's say I put it at 38, 37.9. I'm scalping on this. So let me go in, put my stop loss at 37.9. Going with the fundamental news that I think there's enough positive news now that it won't break that support level. I think maybe it'll bounce. Okay, so and then my take profit I put up here around 40.5, just before this big resistance level. So let's just do 40 even. Okay, and let me cheat that up a little. I don't like my stop or my take profit that far from the resistance level. So right about there, I think I was better at 40.25. Okay, so take profit about 3 times further than my stop loss, at least 2 times further. Let's say 2-to-1 ratio. I'm already in a small profit. Then I say, well, if I'm wrong and it hits my stop loss down here, then there must have been bad news for the market. So then I'll sell. I'll put a sell stop with an entry price about the same spot as my stop loss. So if I give up on the buy for the same reason, I'm in on the sell. Because it broke the support, then my take profit would be the next support level down here. So I could put a sell stop at 37.8. So how do you do a sell stop? Let me show you. Why do I think there's a potential for that support level to break and for oil to rush all the way down to 36-ish? Because there's big news happening tonight. Huge fundamental news that could cause a huge swing in the market. And in trading, it's not about being right. I don't need to be right that oil's going to climb right now. Just because I took a market move to buy because the fundamental news makes me think it should go up right now, I also understand that the news can swing. The fundamental news can have that other type of fundamental news, the unexpected fundamental news. And so I need to back myself up to cover that type of fundamental news as well. So now, great. If it goes up and hits my take profit, great. My sell position never opened, but I'm ready. In case I'm wrong on the first move, I want to be smart. I don't want to be right. I want to be smart. I want to profit. I don't care whether I'm right 50% of the time or 40% of the time. I just want to profit at the end of the day, right? Or at the end of the week, etc. So I'm going to try and set myself up to be able to profit even when I'm wrong with my initial move. So pending order, sell stop at price 37.8. If it hits 37.8, I'm selling. My stop loss then's back up above that at 39.25 maybe. It would have to break back above that broken support for me to give up on the sell. 39.3, let's say. That's up $1.50, okay, in the price. My take profit would be down here around 36.7. Or 36.5. Okay, so my sell stop is set up. Actually, I don't need my stop loss maybe to be all the way up at, let me see where I put it, 39.3. That's a little high. I don't think I need it that high. You could if you want. It lets you be more patient with the sell stop. But I'm thinking my stop loss would just need to be back above the broken support, which would be maybe there. Okay, that gives me about a 2-to-1 ratio, my potential profit to my risk. And you see, here's the support level here. This was resistance, breakthrough, becomes support with a bounce. So if it breaks this support and I enter here, my stop loss back above that support, I would only give up on the sell if it broke back above the support and hit my stop loss up here. Okay, that's the concept of support and resistance along with the fundamental breakthroughs. So we're riding upward momentum if it wants to go. We're ready for a reversal and a broken support if it wants to break, taking profit just before this major support level down here. Okay, and you could say, well, maybe I'll take profit a little closer, right up on this second support level rather than down on the last one. Okay, fine. It's almost a 1-to-1 ratio, a little better than that. The take profit's about 30% more than the risk, maybe 40% more. Not 2-to-1, but a better ratio with profit than loss on that as well. Lee, some prefer market execution only. It's up to you, right? Let me show you what you missed today if you did only market execution and you weren't watching. Okay, you see this plunge? How hard would it have been, or how easy would it have been to have a support level here identified? This is the support level going into just today. Okay, the market was here today, ranging down, up, waiting. And if you knew, hey, there's a support level, I could have had a buy stop up here, ready to buy if it breaks the resistance at the top, and a sell stop ready to sell if it broke the support. And look what happened. Look at that plunge. Okay, a simple sell stop would have paid huge on this breakthrough today right here. Okay, so you might prefer market execution, but unless you were watching exactly when this broke, you wouldn't have gotten in on this sell. So some smartly placed pending orders can really make a difference in your trading strategy, because you don't know when that negative headline is going to hit that, hey, there's supply worries with oil, economic worries with oil. Boom, oil already dropped by the time you saw the headline. It's too late. You missed it. So pending orders, you don't have to know why this broke. Okay, this broke through. It could have been the negative announcements out of the European Union today. It could have been the headline about fear about a slowing of the economy, whatever it was. Something caused this support level to break because of fundamental news, and down it went. And a simple sell stop pending order right here, you'd have been in. Okay, so the same concept exists still right now as we look at oil, and we're saying, we've got a buy position here, we've got a pending order ready to go on a sell position if it breaks and comes down here. Okay, we need to be on the 4-hour candles to see these prices. Okay, the 5-minute candles don't show us enough with this view. So just some ideas to prepare for upcoming fundamental news to be ready for it. And I think oil could be a big mover still today. Now, if we look at some of the indices, especially the US indices, because of the US election situation, we can look at the S&P 500, the NASDAQ. We see, if we look at 30-minute candles, the market's been just moving sideways today. It dropped a little and going sideways. Here's a pullback, and you see, if we look like 15-minute candles, we see a little bit of a support level formed here in the 15-minute candles. Okay, hit and bounced, hit and bounced. The markets are just waiting for a surge up or a surge down is what this looks like. Okay, now you might wait until closer to the debate that'll be occurring at maybe 1 in the morning London time. Okay, so just prior to that time, you could find your price levels. You could say, okay, what's it look like now? And set up your pending orders for buy stop, sell stop. If it breaks through the resistance on the upside, maybe on 15-minute candles, you're in on a buy. If it breaks the support on the downside, you're in on a sell. To set up those pending orders now might be a little early, because it could wander up and down before you see a big move with the debate actually getting underway. Now, to make a move now with this little support level, you could do that. NASDAQ, take a trade size that makes sense. Maybe you say, I see a little support level, let me buy. You put your stop loss below this little support for a little scalp move. So if it hits 11,280 or so, then it breaks this little support. So you could say 11,280, I'm out. So a small move, scalping, 11,280 and a stop loss. Take profit is if maybe it goes back towards today's high, up around 11,430, something like that. Okay, and then we take a look at the lines and we say, well, okay, there's the high today. There's my take profit. Here's my support level, the low that it hit today. And I don't have to risk much. I don't have to risk much. Technically speaking, it's a sound move. Fundamentally, it makes sense, maybe, because the big news hasn't hit yet. The markets are bouncing. They're not really running in one direction so strong. So the fact that it pulled down some, there's a little bit of a support. The fundamental news in general wasn't bad. We saw the consumer sentiment was better than expected out of the US. So you could look at this situation and say, fundamentally, a bounce right now might make sense leading into the debates tonight. A little bit of a bounce. And you're only risking, technically speaking, it's a nice entry point with a support level. So it's a small risk for a larger potential profit to the first resistance level. So not a bad move. And if you're scalping, you can get out even quicker, right? Just waiting for the bounce. So this sets up nice for short-term moves. I think the moves for tonight could be a sell stop below a bigger support level, right? You could have a sell stop down here below this support level. If it breaks this and breaks this, then maybe it's big news and you get a big drop. And same thing above this high point up here. If it goes above this price up here, above the high point, then you have a buy stop up here maybe ready for a big breakthrough, the bigger move. So this is just small scalp playing with the support and resistance as it sits now with limited risk, larger potential profit, little scalp moves to bounce. Okay, the bigger setup for tonight for what could be a really big move would be if it breaks the high point, a buy stop up here. If it breaks this low point, a sell stop down here below 1, 2 support levels to get in on a sell stop, above 1, 2 resistance levels up here to get in on a buy stop, preparing for the later news. But again, you might wait on those until you get closer to the debate time tonight. And I promise you, there will be some big movements as that debate gets going and as the consensus rolls in as to whether someone's doing better than the other. You see some movements on the charts that could have really high potential, okay? Especially NASDAQ, S&P 500, Dow Jones, the US indices, okay? And remember, the individual stocks out of the US, they're only open during US market hours, but the indices go 24 hours. You can trade on those straight through. So you don't have to worry about gapping. If you get in on US indice and then the market closes, the indices keep running, okay? So maybe a little easier to trade on than the individual stocks, although the stocks are nice. You just have to play the timing of the individual stocks around the open and close of the US market, European market, etc. Okay. Lee, I don't abide by any specific rule on how far away, how many pips away should your stop loss be, your take profit, your entry on a pending order. I read the charts. The charts should probably determine where your stop loss and take profit should be. And if the stop loss has to be further away to be below a support or above a resistance level, then maybe your trade size is smaller because it's more pips away to get your stop loss in a spot that makes sense for you, or your take profit. And if it sets up like this one, the stop loss was nice and close to get below this support level, then I could go a little bigger trade. because it's less pips away or less points away. So, some do trade with an exact ratio every time, stop loss 20 pips away, take profit 40 pips away, whatever. And if that's the way you want to trade, that's great. You work out the probabilities and go for it. What we're looking at here are price levels that are reading the candlesticks like music notes. Okay, you see the repetitive patterns. You can see it. You can see the resistance and the drop, the breakthrough, becoming support, breaking through, acting as support based on past movements. It becomes rhythmical, something that you can see where the tempo will change. If it breaks this price level here, you know that's a major support level and the tempo has changed. And maybe now you get a completely different movement. Until it breaks the tempo that it had today, we're banking on the tempo to stay the same, to stay above this support level. Okay, so scalping, I can say, ooh, let me take my profit now. I just made $54. Why? Because I went with the tempo as we know it now. And the fundamental news didn't change in that 5 or 10 minutes that I had the trade open. So I could go ahead with the fundamental situation as we know it now. The phrase would be like ride the wave. The wave was moving up. The fundamental news said, hey, why should it break a support level now? There's nothing new breaking. So we jump on it, we take the profit. Okay? The pending orders, if we put a pending order down here, I'm waiting for a change in tempo. I'm waiting for something, it's that song that all of a sudden the rhythm changes and goes faster or goes slower. That's how the markets are too. All of a sudden something can change the tempo, can change the pattern. And the fact that there's this big debate tonight, that could be it. So a sell stop down here, waiting for this support maybe to be broken. If it was an hour from the debate time now, and this is where the movement was, for sure could make sense to put a sell stop right here, below this support level, just waiting. You don't want to get in below the first one because just the volatility, it could break that first one. But if it breaks this and then breaks that, ooh, maybe you got something there with momentum. Now you're in on the sell stop down here. And the same on the way up. You don't necessarily want to get in just because it breaks the first resistance. But if it breaks the first one and the second one, now you got something, especially if it's right as the debate gets going. Okay. Good questions. Okay, so that's the setup of the NASDAQ. I think it might be worth your time to set up a sell stop maybe down here, a buy stop up here. If not now, then maybe a bit later. Okay, as it gets closer to the debate time in the US. DAX 30, it looks the same, doesn't it? Look at it. Support level, okay? Support, support. This was old resistance area, which broke above it and became support, okay? And you can see the support and resistance tends to be kind of in a zone. It's not just one exact price. And let me show you. If I can move my line. Okay, there we are. So this would be the old resistance here, right? Resistance, resistance, and then here's the breakthrough, and it becomes support right here. Breakthrough candle becomes support. Here's the old resistance. Breakthrough candle took momentum, like maybe a debate could cause, and then boom. Once it broke through, it was up and running. Okay? That's what we're talking about, a breakthrough of a price level. And then you see there's a little bit of a gray area because the support starts to be formed here. Support, support, but the real support is down here. So this is kind of a no man's zone, right? I'm not convinced that it broke the support until it gets below this level. And that's what I'm talking about, a sell stop maybe being down here. Okay? This is a pretty clear resistance up here. So if it breaks above this high point, there must have been positive momentum on the market. All right, Billy, you said you have serious questions, I think you said. Go ahead, type your questions and anything that you want to ask, please feel free to go ahead. We see oil bouncing up like we expected to a bit. Again, if you're scalping, you just take the profit, right? Small risk, high likelihood of a bounce, boom, you go with the wave as you saw it, and we just were 2 for 2, right? Made, I don't know, $80 or something, $70. So the longer moves maybe are your pending orders. You're waiting for the big news to hit because you know there's big news coming tonight. And so you got your pending orders set up with longer take profits, being more patient, okay? NASDAQ being an example, DAX, this is the DAX being an example, Dow Jones sets up very similar, etc. The FTSE, they all pulled back today, and they're all moving sideways right now, just waiting to decide to break up or to break down, okay? Again, pending orders above the resistance, buy stops, sell stop below the support, ready to drop. I prefer the U.S. assets on this U.S. debate that's occurring rather than the European assets. You'll probably maybe get a stronger reaction because it's more pertinent exactly to the U.S. Let's also look at gold and see what's happening with gold. Gold climbing. That's a sign. Surprisingly, it's a sign that the markets might rise. The markets might bounce. And you might ask, well, isn't gold a safe haven? Gold's climbing. Doesn't that mean there's more fear and that the markets should drop? Lately, ever since the pandemic, as the US dollar weakens, people are getting out of the US dollar and buying into gold because they believe gold will strengthen even with good economic news. They believe gold will strengthen in the long term because there's still a pandemic. And so as people are feeling some positivity and buying into the Dow Jones, the NASDAQ, the CAC, the DAX, they're also buying into gold, surprisingly, as the USD weakens because people are selling off the USD as a safe haven asset and buying into the riskier assets of stocks and indices. Because the USD is weakening, gold is able to climb because it's paired against the USD here. So, and gold in general is still bullish because there's still a pandemic. So it's been a little bit weird that as markets have been hitting all-time highs, so has gold, but that's been the pattern. Whether it makes sense to you fundamentally or not, it doesn't matter. That's been the pattern, and it's occurring again today. So gold shooting up right now on the 30-minute candles tells me the markets are trying to rise as well. That's been the pattern, okay? So let's take a look at 4-hour candles. We see a bit of a resistance level right where gold is right now. This was support, 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 and breakthrough. And gold is trying to break through that right now, which tells me if it does, there's the potential for gold to climb up to that next level here, which is 1919. That would be another, $20 rise per ounce before it gets to the next resistance level. So if we zoom back in on gold and say, wow, it just broke this resistance here, just broke it. So if you say, okay, a pending order, if gold pulls back down to say 1893, that might be an opportunistic spot to buy. If you're bullish on gold anyways, you could just buy on a market move, right? Or you could do both. So I might say, okay, let me buy on gold with a limited size, maybe 0.1. You know, trade size is irrelevant unless I know what your balance is, right? You determine your risk management, but let's say you take half the size you're willing to expose as a market move. Okay, fine. You buy on gold and you put your stop loss just below this breakthrough, this resistance level that was broken right here. So you say if it comes back down to 1889, I'm out. Okay, so stop loss 1889, maybe you're out. Okay, and then you say if it comes back down to 1893, I'll buy again because it could pull back to that support, that broken resistance that it broke through a while ago before climbing more. So you say, okay, let me do pending order. Buy limit is buying from a lower price. So we understand this could pull back down before it would rise more potentially. So at 1893, I'll buy again at 0.1 from a better price and still have my stop loss down here at 1889. Okay. Risking less on this with a more perfect entry point. And my take profit, we have to determine, right? So pending order. You're in on the market move. If it drops like we see that it could, then you're in, again, a little bit heavier then. This move is only if you're bullish on gold, right? Only if you're bullish on gold. This is the move. And then we look, okay, 4-hour candles. Where might we take profit? The first major resistance is up here. We'd be talking about 1919. So we go here, modify 1919. And on the pending order, we could say the same thing. If that one opens, 1919. Maybe you say, okay, since I'm starting at such a much lower price, maybe I'll have a stop loss a little lower than the other one, 1887. So you can stay with it a little more. Okay, so now I'm in with a market move. If it climbs, great. If it comes down, triggers my second buy position from a better price. I even have my stop loss further away at a lower price on that one because I'm getting in at a better price. And maybe I still profit even if I'm only 50% on these two trades, right? This is what we talk about risk management, giving yourself potential profits, not even having to be right more than 50% of the time and still potentially profiting on the move. Okay, I can walk away from this and let it go now. I don't have to watch it. I don't have to be stressed. It's a small percent risk based on my trade size and my balance with a nice potential profit. You all understand that if you make only 1% profit per day on average, that's like 20% profit a month. That doubles your balance in less than 6 months. So small gains, 1% per day, it really adds up. And if you're doing even more than that, then great. Okay. All right, everybody, I think we'll stop here. We've been going for near 50 minutes. I don't want to overload you. I think you understand the concepts here. Huge potential for breakthroughs and moves on gold, indices, etc., oil. So closer to maybe the time you go to bed tonight, closer to the debate time, check out these assets and get your pending orders in. Get ready with your buy stops and sell stops for breakthroughs because there certainly is a high potential for some large movements through the night tonight. All right, everybody. Thank you for joining. Any last questions, let me know. And we'll be back at it Friday this week. Yeah, all the webinars are recorded. Go to YouTube. Just search AvaTrade channel. You'll find AvaTrade's YouTube channel. Go to the English webinars section, and you'll find all of the English webinars recorded and uploaded there. Today's will be uploaded by tomorrow. All right, everybody, good luck with your trading. I believe there's huge potential this evening, so hopefully you're in the market. Yeah, you obviously have to be in it to win it. All right, everybody, bye for now.